backwards. You can't, those guys from Australia did not have any concept that they were going to look out there and see two black swans. And so what we had, going back to August of 2020, we had the major Derrick storm event in the Midwest. February of 21, this big spike in natural gas prices. It shut down some plants. Now, some of these plants were still producing industrial ammonia, but they had to shut down as far as producing agricultural ammonia because the price was not there. August of 2021, Hurricane Ida makes landfall at Port Fourchon, Louisiana. Now, if you know your geography, that's right there at the mouth of the Mississippi. And CF Industries, the world's largest nitrogen producers right there, along with Nutrien's Geismar plant, another very large nitrogen plant, as well as the Bayer packaging facility, where most of the glyphosate in the Midwest is packaged. You want to talk about a hit to Central American agriculture. That was really, really tough. A month later, we have the European energy crisis starts. We start closing plants in Europe. The price of gas goes way up. A month later, China says, I think we're going to have an export ban, and Russia followed suit, limitation of all their fertilizer exports. They just said, we're not going to supply them anymore. We also had the continuing effects of COVID on freight, production, and logistics. So it was not set up to do too well. Phosphates were the same way. We had low import volumes due to the CVD case. That's not short for COVID. The CVD stands for countervailing duties. What happened there is Mosaic, who's 75% of the US phosphate market. They stepped into the Department of Commerce and said that we've been materially injured by the low prices of phosphates coming over from Morocco, China, and Russia. And so the wisdom said that we need to put a duty on all these imports up to 40%. And all of a sudden, you combine that with the natural gas, phosphate prices went to $1,000 pretty quick. And so that didn't help us all. We also, in the spring of 21, when phosphates were still relatively inexpensive, we had a big run on phosphates. So the supplies were low. After the hurricane, it messed up any kind of production. There's also big production in Louisiana and Florida. And then all the barge traffic was at a standstill. Along with India and Brazil had very strong international demand. And again, this is a little note on the CVD case. It came from the Department of Commerce, and that will be in effect for the next 5 years. So we're looking at a 2026 before they're going to look at that again. So even though all the other pressures are pushing down the phosphate price from a supply, a cost of production with the sulfur cost and the gas cost, there's still going to be that countervailing duty. So we really can't get away from it. On potash, the basic story was just a lack of producer inventory. In 22, it was at its lowest levels since 2015, almost down a third from 2021. And then on June the 4th of 21, Mosaic announced they were going to close 2 mine shafts. Now, they had planned on doing that and open up the big K3 mine, but this happened 9 months earlier than they expected to. So it's almost like Mosaic was out of business for 9 months, and that's almost a third of the global market for potash. So that really stung. And then 2 days later, the United States reinstated sanctions against Belarus. Now, this was not due to the Ukraine conflict. This was a buildup to that, and those sanctions were in place. Now, if you look at the world potash capacity, you can see. Let me get my laser going here. You can see that Canada is the lion's share of production. But if you look back here, Now, China, they just said they're going to have an export ban on a lot of their products. Russia and Belarus has export, a duty placed on them, and Russia is looking at export bans. So now you're looking at having Canada supply the rest of the world. That did not go over too well. And so what happened? We had $1,000 potash. So what were we watching for last year? A lot of time was spent on the sidelines, because I'm telling you that from a retailer's perspective, when you write down a price on a piece of paper and hand it to a grower and there's a comma in the price, that does not work too well. They're looking for something that starts with a 3 or a 4. And that's what we've been used to. That was the norm. But when you wrote it down and it had a comma and they said, no, just 1 ton. I said, yes, sir, just 1 ton. So why were we looking for a bull market? There was really no excess product in the world. There was really no reason for the prices to fall. We had the European energy crisis, and it was combined with what was about to be the Russian-Ukraine war, but there was really unrest at the Ukraine border. We had lack of imports from China due to the export ban. Yet India and Brazil continued to buy, and what were they doing? They were going around seeing all this and cleaning up whatever excess inventory there was in the world. If Morocco had a vessel of phosphate, man, they'd snatch it up. If Egypt came out and said, hey, I've got 3 vessels of urea, send them. So they were going around just cleaning all this up. And India is famous for putting out these big block bids for urea. And when they come up to the plate and say that we're fixing to bid urea, it really, really affects everyone stops what they're doing, because they're not there to buy a couple vessels. They're going to buy 1 million tons, 2 million tons, 3 million tons. It's really going to have an impact on the market. So if there's a lot of excess product, a lot of times that's when India will step in. But there was never really a point where there was excess product, yet they still had to step in, because they're almost in worse shape than we are. As far as the United States is a net importer of nitrogen, India is a net importer of everything. They're dependent. They have all the people to feed. They grow lots of crops, but most all their fertilizers imported. Now there's 2 sides to every coin. If there's a bull market, someone says, no, it's a bear market, and I'll tell you why. At these prices, there's going to be actual demand destruction at the farm level. Now there's the farm level. When I talk about that, I'm talking about states that begin with the letter I: Iowa, Illinois, Indiana. It is wall-to-wall corn, and the only thing in between the corn rows is beans. Okay, there's a little town every now and then, but it is wall-to-wall corn. Now, we'll talk about this a little bit more in a minute, but we're in what we call the fringe acre. We have a lot of cattle, we have a lot of pasture. Some of it's fertilized, some of it's not. We grow mesquites, we grow this, we grow that, we grow a lot of concrete. But for the size of Texas, and then western Oklahoma, western Nebraska, where there's less water, if you just run I-35 straight up, you get west of there, you run out of water. So that's what we call the fringe acre, and they're going to be a lot more sensitive to pricing. Whereas someone in Iowa that's got corn planted in 5 foot of topsoil, where it rains on every Sunday, a ½ inch or better, and it's just perfect. Fertilizer goes up $100. It means a lot less to them than the guy here in Texas on some fringe acres that's not as productive. So it makes a lot of difference. We had some said we're going to have a really warm winter, and we're going to get natural gas back down under $4, and that's going to really prop up domestic production. Others said, well, I don't think it's really rained yet. There's none in the forecast. I don't even know if we're going to plant. Maybe so, maybe not. And so there was still a lot of things to happen that could turn this into a bear market. So how did it actually turn out? What really happened? So beginning in December of 2021. So remember, the crop year 22 starts in the fall of 21. I've got some slides here we'll look at in a minute. The forecast was going to be for this 91, 92 million acres of corn. We didn't quite hit that, but all throughout the fall and winter, they were saying 92 million acres. Come on, what does that mean? Lots of fertilizer, lots of fertilizer. So the countries that were producing excess nitrogen, what did they do? They said, the United States is going to plant 92 million acres of corn. Let's get in on this. The price is going up every day. Send the vessels, just send them unpriced. It'll be good. It'll be all right. So by the time we got to December, now we can look back because the import data that we get is 2 months old. I was hoping to have data tonight for December of 22. Of course, they knew the meeting was tonight and they're going to publish it tomorrow morning. So that's just how the ball bounces. But it does look like we were a net importer, or I'm sorry, a net importer of nitrogen for December, which is not always the case. Sometimes we export more than we import. But anyway, the imports far surpassed the expected levels in 22. By the time it got to April, just looking at urea, the wheels came off the bus, and there were vessels lined up behind vessels behind vessels. We didn't know that data until June, but the wheels really started coming off the bus. India and Brazil backed off. Okay, like I say, when India buys when they want to buy, and they buy 4 or 5 times a year. When they do, it makes a big splash. Sometimes when they don't, it makes an even bigger splash. So that further relaxed our global supply constraints. Natural gas, the Dutch TTF is something we're really watching now. Here recently, that has really surpassed the Henry Hub natural gas price as a global gas price to look at. It got as high as $100 US dollars for an MMBTU. That's the same natural gas we're talking about that was $2.95 yesterday for futures. Okay, it got up as high as 100. Today, it closed in the 17s. So it is 5 or 6 fold less than it was at that time. The plants that stopped producing, except for industrial ammonia, the plants over there in Europe started shutting down at $20, $25. They said, man, we can make industrial ammonia for a while longer, maybe up to $40. But as far as making agricultural ammonia, it's better off to send our guys home and figure out how to pay them something, but it's better off to shut the plant down. So we did have actual demand destruction at the farm level. Now we have the farm level and we have the fringe level, which we're on, but there was actual demand destruction at the farm level. It wasn't so much on the nitrogen. That's the last thing they cut. But the phosphate and the potash, those are something we can build in the soil a little bit. And those got cut drastically. Now, you go up in the panhandle where Dr. Welch has a lot of experience. That's not a big potash area. When I talk to my guys from CHS, they want to price me nitrogen and phosphate out of Friona. And I said, well, what's your potash? And they said, man, I really don't know. We sold a load last year, and yeah, they just, the soil level of potassium up there is just, it just says yes. When you get your soil sample back, it says, yes, you have plenty. And so that's not really something they work on, but big difference there. And China relaxed its export ban. They said, you know what? We've done pretty well. We've made a lot of product, and we think we have more than enough to supply our needs. So let's just start loading some vessels and just start sending them everywhere. And they did. Now, again, that's got a 2-month lag on it. But when they started landing everywhere, it made a big impact. We've got the Russian-Ukraine conflict, and what did we say was going to happen now? Dr. Welch can talk a lot more about the grain side on this, but those are major exporters of potash. major, they're between Russia and Belarus. You saw that was a big piece of that pie. We said, well, that product's gone. It's off the market. Well, it didn't come. They didn't send it to Ukraine, and we thought they weren't going to send it to the United States because that was going to be our little cut at them to say, well, we're not going to buy your potash anymore. Well, lo and behold, when the dust settled, the Russian tons never stopped flowing to the United States. They might have changed hands one or two more times before they got here, but all the Russian tons kept coming, and they made their way. First, they sent a bunch to Brazil. They welcomed them with open arms, said, well, we'll take them at a discount. And then when Brazil got full, so the Russian exports of their products, it never slowed down. And we didn't count on that. We were thinking we would have to do without. And so that was a big game changer, as we found out. So the recap, the three main factors that have brought us some price relief. Had imports during Q4 of 21, Q1 of 22, much greater than we expected. Really dry weather in the fringe acres, that had a big impact. I mean, if you think it was dry here in Brazos County, you could have just gone about 3 counties to the north. It was dry. I mean, there was nothing, no water. They couldn't, everything was just zeroed out. So that a lot of that ground did not get fertilized. It's a, you know, when you just cut something like that off, you know, your supply problem goes away immediately. And as we touched on earlier, the Ukraine conflict, it eased. Sometimes I have to look on Google and kind of wonder if the thing's still going on or not. It is. And not to make light of that, there's still, you know, horrible human tragedy going on over there. But as far as from an economic standpoint, a lot of that's just kind of washed away. You know, it's almost not making the news anymore. And the natural gas price, like I said, is a 5-fold decrease from where it was. This is a slide we can look at and show you a little bit about the imports. Now, 2021 was the green bar. So here we are in January. That's above normal. March above normal. April almost above normal. July big. Here we are in November and December. Look at or October, November, and December. Some of the biggest import months we've had. Look at that green going back. Now we go to 22, and we come back to January, February, March. Look at April. That was the straw that broke the camel's back, as far as when product was priced at $1,000 a ton, and those kind of imports came in. I mean, this country was swimming in urea. When did we find out about that? After the season was over, of course. You know, it was July when we found out about that, and it was too little, too late. Everyone who was going to fertilize had already fertilized, and it has taken this long for basically retail prices to come from $1,000 down as maybe even under 600 in the near future. So that's what we really want to see. Here's what I talked about on dry weather on the fringe acre. Here's 2022. Here we are here in Brazos County. Look up here in Falls County, Milam County, Hill County. That darkest red is the excessive drought. That means there's no water. I mean, it is really dry. You're not planting anything. Look at almost all of Oklahoma, western Nebraska, western Kansas, even up into southern Minnesota. The poor guys in South Dakota went from the wettest they'd ever been to the driest they'd ever been, all in about 12 months. So they didn't know if they were coming or going, but it was a wreck. But look back to 2010, and this is that's just a normal year. That means it's not overly wet, it's not overly dry. But if you compare the two, you can really see how that big of a landmass with no water just shut the fertilizer down. It was all there. It was in place. All the big outfits up and down the river system were just loaded to the gills, and they thought, well, it's going to rain tomorrow, and we're going to sell all this. We'll be good. We haven't lost money yet, but they really took a whooping at the end of last summer because the fertilizer kept coming and coming and coming, and finally they said, "Don't send any more upriver. There's no place to put it." And so that's when the prices really started coming down. Here's a little chart on the Dutch TTF, and that's just natural gas in Europe. They're going to run higher than us, but you can really see at the Russian invasion. This is January of 22. That's when things really started picking up. And look off to the left, and that graph just goes back to 20. But that's that graph, that very flat graph, that just went out forever and ever and ever. Just like corn used to be $2. The natural gas over there was just at that price forever and ever and ever. Then we have the plant shutdowns due to the gas cost. And then the Russian invasion got really serious. And look at this. This went up to almost $90. Even some of the early out forward prices broke $100 per thousand. Talking about completely shutting down any hope of production in Europe. Here's kind of to sum it up. How are we trending now on fertilizer value? And what I mean by that is when someone calls and says, "How much is your fertilizer?" and we kind of shy away and tell them, they say, "Well, that's too high." And I say, "Well, relative to what?" is what Mr. Deathridge's famous quote is, whether he's saying it's your price in breeder cubes or T-post or fertilizer, and the customer says that's too high, and they'll say, "Well, relative to what?" "Oh, that's just too high." Well, maybe it is, maybe it isn't. What this graph represents is 1 bushel of corn, Chicago, and 1 ton of urea. Now, this is not a retail price on urea. This is 1 ton off of a vessel at New Orleans. That's 50,000 tons on the boat. It's not off the boat. It's not on the barge. It's not on the rail car. It hasn't been delivered to the co-op. We haven't put any gas in the loader. None of that. So this is not based off a retail value, but it's based off something that's a consistent price we can look at and have a history of. So here a couple of years ago, we were floating around 50 to 60 bushels is what it costs you to buy a ton of urea. Jump up here to early 2022, a year ago, went from $50 or $60, 50 or 60 bushels is what that farmer had to set aside to buy that ton of urea. 160 bushels of corn to buy that same ton of urea. And that's because the price of the urea relative to the price of corn went way up. So they've closed back down. What happened? The price of urea has dropped drastically. The price of corn has dropped, but not near as drastically. So this value to the farmer, where a year ago it cost 160 bushels to buy that ton, today, and it even closed lower than that, we're at that's 58 bushels. Now the lowest we've seen in recent history was 2018. It closed at 49 bushels. But what we're looking at on this graph, when you're trying to talk to a farmer and say, is that too high? Is that not too high? What portion of the graph are you in? Are you in the top third of the graph where it was 160 bushels? Yes, that was too high. That was too high. Are you in the middle portion of the graph where, and my best ground is going to get some fertilizer, my weakest ground, maybe not? Are you in the bottom third of the graph where the growers and the fringe acres really start coming in? we're in that bottom third of the graph. And if you're a farmer and you can lock in a price and a cost, that's not a bad ratio to look at right there. A couple more to look at. Now this one, I kind of made this on a whim. I haven't seen this one before, so I went ahead and made it though. This is pounds of feeder cattle compared to a ton of urea. And here in this part of the world where we deal probably with more pastures than crop ground, I thought this one was pretty relevant. Now, this is pounds of nearby feeder cattle. So I took the March feeders for this month, and then I compared that with the current or the prompt NOLA barge price for urea for 1 ton of urea. That's off that vessel. There's no basis involved or anything. This is not getting the cattle to the feed yard, so the basis is not in there because it's going to vary quite a bit. The highest it got was up here about a year ago. It was 500 pounds of feeder cattle to buy that ton of urea. Now we know that a 500-pound calf last year probably didn't buy you a ton of urea. More like a 600 or 700-pound calf bought that ton of urea. But this is based off the NOLA barge price, not a retail price. Come back down to today, and I believe the NOLA barge closed even under this today. We're down to 200 pounds of feeder cattle buying that ton of urea. So what's happened there? The feeder cattle are still going up. They're going up. And out forward says, I think 210 for September. I mean, it's just looking better and better. But the urea price is going the other way. So there's an opportunity there. If there ever was, there's an opportunity there to compare the cost of maintaining a pasture versus the price you can sell feeder cattle for. And that's the comparison I'm trying to show, that if you say, well, that's too high. I said, well, sure, urea needs to be about $200. I agree, but be careful what you wish for. The feeder cattle may be 60 cents. So you think, oh, I just need everything cheaper. Well, be careful what you wish for, because you may get a cheaper price for your product as well. So again, where are we in the graph? We're down in that bottom third of the graph. Not a bad place to be. Here's one I wanted to look at. Another big complaint. If Billy Paget was here tonight, I would accuse him of diesel price fixing, but he's not here. So if you're listening, Billy, we appreciate you. He's done a great job getting that price of diesel down from where it was at $5. Now we're hovering around $4. But how many bushels of corn does it take to buy a gallon of New York diesel? Now this is diesel at the New York harbor. That's really the only good price we can have. It probably has a 50 or 60 cent basis between that price at New York and what it actually comes out of the pump for. But in this time or April of 22, it was 3/4 of a bushel of corn to buy a gallon of diesel. And now we're currently less than half of a bushel per gallon of diesel. Now where are we in the graph here? We're in the middle. So what would I say if I'm a corn farmer and I'm buying diesel? I'd say it's a little overpriced. I think it's too high. I think instead of was it $3.25 for red diesel? I think it needs to be about $2.25, $2.50. That's what I think is right. That would put us down in the bottom of the graph. Or feeder cattle can go to $2.50, either one. But I think right now we're in the upper part of that graph. And historically, I just, if you were going to say anything's too high, I think the diesel has some room to come down. So we'll hope for that. Last thing I want to ask you is, are we in this is going to lead right into Dr. Welch. Are we in a bull market or are we in a bear market? 2008, 2012, that's kind of the era of renewable fuels. That's when all that got really kicked off good. And those were, we said we need more corn. And what did the farmers say? I'll do it. So that was the demand-driven bull market. Now, 2022 was a bull market, but it was a supply-driven bull market. The supply wasn't there. the need for the corn was still there, but the supply of the inputs was not there. So we call that a supply-driven bull market. And the question that we'll leave for 2023, it appears that all the inputs from a global perspective are very well supplied. So the question is, what's going to happen? I think there's still some work to do and prices to settle out. So with that, I appreciate your time. We're going to bring on Dr. Welch and dive a lot deeper into the grain side of it. And like I say, if there's any questions you want to ask, we can look at those at the end. Chad, I may need a hand pulling up Dr. Welch's. So I just closed mine. Perfect.
Ashley, can you see it? Good.
Okay, thanks, sir. Chad, appreciate you putting this meeting together and the invitation to be a part of it here this evening. May feel like you're at the Mark and Mark show here tonight. And I do appreciate the perspective that Mark just shared on the fertilizer market. He brought a lot of insight into this market that I don't track. And I'm going to do a little more homework and digging to try to keep up with a lot of the issues that he just raised. But I think what you're going to see, and I hope that you'll see by the time we finish up here this evening, there's in these presentations, I think they're going to be intertwined pretty closely. And you'll see some relationships of why that is the case for several reasons. But certainly as I looked at his slides before I came this evening, and then now his explanation of those, I feel more strongly about that. And where I'm heading tonight, if I had to give you an outlook of where I think grain prices in general are going for 2023, it's going to be built on many of the same precepts and fundamentals Mark just laid out in the fertilizer market. In that these relatively high prices that we're seeing now, this chart goes back to the summer of 2020. You can see where wheat, corn, and sorghum, that sorghum per bushel, were trading at that period of time, and where we have gone since then, and what's driven those prices to this level. We are much more with higher prices due to a supply constricted situation rather than a firm expansion of demand. And so what I'm concerned about for 2023 is that with some economic factors that will still impact our ability to increase our consumption of grains, that will linger longer than our ability to increase production. And much of that tied to what Mark just laid out with the inputs that may become much more affordable and available for 2023. So I'm looking for, weather permitting, a stronger rebound in supply of grains relative to what we may see growth or even a reduction of demand on the other side. And if that is the case, these relatively tight stocks to use ratios that we have across our grain markets right now, we could be at a tipping point of those, or a reversal of some trends in those factors as we go into this year. So that's where I'm headed. And I think it's interesting to note where we are in terms of grain prices, that escalation of prices over the last couple of years. Yeah, we had that windstorm in August of 2020. It laid down corn from eastern Nebraska all the way to Ohio. So that really put a dent in U.S. production. Brazil had an emerging drought at that time, and China come a-calling. And they were buying all the feed grain they could get their hands on, and that included wheat for feed as well. And so we're on this path of higher prices. You can see the dotted line there indicating the Russian invasion of Ukraine. And then we didn't know what that was going to look like. Obviously, the world depends very heavily on grain exports from Ukraine as well as from Russia. And the status of those, the ability of Ukrainian agriculture, what was that going to look like moving forward? That is certainly not resolved. It's not settled. But yet we functioned in a large degree in the midst of that. And if you look at where prices were as of these are Thursday prices, by the way, that we tracked at our office. We're looking at cash prices of Texas wheat at $8.49 a bushel, corn at $7.98, and then sorghum at $7.13. Back down about where we were in February a year ago. So we've kind of taken all that that froth out of the market, came with the invasion of Ukraine, and things are still tight. Those are still really good prices. And that conflict is not resolved. Could we blow those up again? Absolutely. But again, we kind of adjusted to that world. And much of that in doing that, we've seen what's happened to, this is the season average farm price paid to farmers going back to 1866. And I think it's interesting to note the stair step level of prices. We'll have something that will occur that will set us to a new price plateau. And then we'll be at that level for a certain period of time. And then we'll wait for that next event to step us up to that next level of prices. And over that far right-hand side of your screen is the biofuel era of prices. Demand-driven escalation of prices. That's what gets us up to those new plateaus. A world war will do it. An explosion of world trade will do it. Biofuels will do it. And so that's gotten up into this new era that we're in right now. And you look at those season average farm prices. Yeah, for 2022, we didn't set a record for the season, but we didn't miss it much. And these are prices translated globally that will create opportunities as farmers make planting decisions for 2023. The prices of last year's crop is a strong determinant of what those planting decisions will be. And I don't touch on fertilizer much in this presentation, other than I track these monthly prices, and I'm using anhydrous ammonia, natural gas, and corn. And you can just kind of see the path of those prices going back to October of 2017. They kind of go together. And we could argue which is the leading indicator and which is following, but there's certainly that high correlation between those. In fact, the price of corn correlated to the price of anhydrous ammonia is about a 0.84 correlation. A 1 correlation is mean they move perfectly together. 0.84 means they move pretty tightly together. So if we have high fertilizer prices, we're going to have high corn prices. We have lower corn prices, we have lower fertilizer prices. And so I think that ties to much of what Mark was just sharing with us, that be careful what we wish for, because again, these two tend to move together. And I think the key in that relationship is to capture value when we see pricing opportunities, either on the input side or the output side, but certainly a strong correlation in those prices moving together over time. That chart is kind of messy. I'll kind of pick through that a little bit. Many times you'll hear people talk about levels of grain stocks that influence prices, and they'll use what they call a stocks to use ratio. Well, the number I like to use is the same thing, is days of use on hand at the end of the marketing year. So we get to the end of the marketing year for corn, that's August 31st. How big is that pile of corn in the US or globally compared to how much we use on a daily basis? So in other words, how long can we live next year on the grain that was left over from last year? You can see the chart has 3 different indicators on here. It has a global number for the world. That's kind of the tall numbers there and kind of the striped lines. The more yellow shaded area, that's the world if you take out China. China is holding over half of the world corn stocks, and they don't trade a lot of corn on the global marketplace. And so in terms of a market mover, I'm trying to look at maybe factors outside of China. So you take the world less China, and now you've got those yellow bars, and then the US days of use on hand at the end of the marketing year are the blue bars. There's not a lot of difference between US numbers and world less China. The nice thing about trying to estimate a price or fundamental impact of fundamentals on corn prices when we have US data is that the US still drives the world corn market. We're the biggest user, we're the biggest producer, we're the biggest exporter. We are still the main driver of the world corn market. And so that combination of world less China and US alone is really not a lot of difference in those. But I want you to note that 40-day line. That's going to be very important for any price forecast that we have for 2023. And I'll show you why here in just a minute. But keep an eye on that 40-day carryover. We've been under a 40-day carryover in the US for the last 3 years. And my price outlook for 2023 is based on the degree or the probability or the likelihood that that number is going to get above 40 or not. We'll talk about that here in just a little bit. Watch that number. Okay, a little bit of economic theory. You're all familiar with the law of supply. All else being equal, the quantity supply of a good rises when the price of the good rises. That's just kind of good old basic economics 101. But look at 2022. If you look at our coarse grain plantings, food grain plantings, and oilseed here is soybeans and sunflowers, You look 22 compared to 21, we planted less coarse grains, and Mark gave a good explanation of why that might have been the case. Food grains were also down a little bit. Now, oilseeds, they did come back up somewhat for 2022. But this is not a 1-year price pattern we've been on. Let's back up a couple of years. Go back to 2019. And now let's look at coarse grain acres, food grain acres, and oilseed acres. They're up about 5 million for our coarse grains, feed grains, up about 16 million for rice and wheat, and we're up 35 million for oilseeds. If you add those all together, in our harvested acres of those major commodities, we're up about 55 million acres. And so the production base is growing. And one of the interesting facets of economics and agriculture is that when we bring that productive capacity, we start putting something on that ground. Just because prices go back down doesn't mean we take it out. In fact, for an individual producer, we need to farm more land. We've got to get more productive to get that break-even cost down. We'll push production even more when prices start to come down. We have seen a general increase in the supply of harvested acres over the last several years. Now, about half of that 55 million, that's corn and bean acres in Brazil alone. Brazil accounts for about half of that. And again, just to give you some perspective of how big is 55 million acres? That's a Brazilian corn crop. So that's about how much we've added to the productive capacity of agricultural land in the last 3 years, is basically adding another corn crop from Brazil in terms of that kind of area. So what might that mean for projections of U.S. corn in 2023? I'm going to rely on these long-term outlook that we got from USDA back in November. Planted acres in 2022 came in about 88.5 million acres. We talked about some of the reasoning for that. What might we see for 2023 with the adjustments we're seeing to somewhat lower input prices in some cases, and still relatively high output prices, particularly for corn? Back in November, USDA's number was 92 million planted acres for 2023. I don't think that's out of the realm of possibility at all. I think that's a really good number. Yield-wise, now the yield estimate did come up in subsequent WASDE reports and crop production reports from USDA. It's up something over 172 bushels now. But a trend line yield, a normal kind of yield in 2023, the U.S. would average 181 bushels per acre. That would be a normal kind of yield in today's world. So if we increase acres by 3.5 million, and we put 10 bushels an acre on the average yield, we're looking at another billion bushels from the U.S. corn crop in 2023. So I think the factors, and that's weather permitting, there's a lot of pieces that have to come in place to do that. But I think the capacity of getting back up to a 15 billion bushel corn crop or more is, again, not too far of a stretch in today's world. And we'll talk about the demand side here in just a minute. But I think the forces are there. All right, what about our friends from Brazil who are now planting that second corn crop? You can kind of see that green, that green circled area. Of course, the primary export supply of corn that comes out of Brazil, I don't know why I've gone to a slideshow mode for some reason. I'm going to try to hold it here, is in that green area. And that same area, there's the drought map for that same area. That it's very, very dry in Argentina. But if you look at where that crop is primarily going to come from in Brazil, as they're planting it right now, their crop calendar for their second corn crop is much like it is here in Central Texas. They're going to plant that crop in late February, early March, and it's going to be ready to harvest in late July and early August. And that's what the drought monitor looked like for that region, where most of that corn is going to come from. That was the January the 10th is when that map was generated. And we'll get another update on that here later this week. But the situation is there. It looks pretty good right now in terms of Brazil's production of corn for 2023. That's what total corn production looks like globally. And you can see the degree to which the United States accounts for that. 30 to 40% of the total corn production in the U.S. comes globally, comes from the U.S. And that number being down in 2022 Again, in the US, our acres were down and our yields were down. And so if we combine a rebound in production in the US and some production capacity globally, certainly we could be back up in that 45, 46, 47 billion bushel range. I don't think would be out of the realm of possibility at all. That's supply. What about on the demand side? The law of demand states that other things being equal, the quantity demanded of a good falls when the price of the good goes up. I don't think many of us would argue with that, but we're talking about grain, right? People got to eat. Price of grain doesn't go down just because the price goes up, or the quantity consumed of grain doesn't go down just because the price goes up, right? Well, it does. If you look at that grain use line, that's that dotted red line, that is world per capita grain consumption. And when I say grain, I'm talking about barley, corn, millet, mixed grain, oats, rice, sorghum, soybeans, which is not really a grain, but an oilseed, and wheat. World per capita consumption of those crops does go down in short crop years or times of high prices. It can go down. And if you look what's happening in 2022, it's projected to be lower this year than 2021. Contributing to that strong increase we've seen in world per capita consumption over the last 23, 24 years now is the increase in average income in the global developing and emerging economies of the world. So the numbers I'm using here, I'm using average incomes in Brazil, Russia, India, China, Mexico, and then another group of Southeast Asian nations, Indonesia, Vietnam, the Philippines, Thailand, and Malaysia. 10 countries. As average income started to go up in that part of the world, you can see how that drove world per capita grain consumption. And so what we're looking at for 2023 in terms of grain consumption will be tied very closely to growth in economic conditions in those countries. The prospects right now look rather muted for much of the world for 2023. I don't know that officially we're going into recession, either in the US or more broadly, but certainly I don't think we're out of the woods in terms of seeing the economic conditions being significantly better for 2023 relative to 2022. We got some challenges ahead of us. We're still trying to work out. Much of that because of what's happening in Russia and Ukraine. The other is economies around the world trying to get a handle on prices. As central banks try to control inflation, they will use monetary pressures that will dampen economic activity. They're going to raise interest rates, get prices under control. That's going to slow down the economy. And certainly we're not out of that wood by any means. But isn't that interesting, that pivot point in the late 1990s? You think about what happened. What in the world changed in 1999 that was different than 2000 or 2001? Much of it had to do with these things right here. Think of the information and technological explosion that has occurred since the late 90s, early 2000s. And the computing and communicative capacity that we carry around on our hips now that were unimaginable 20, 25 years ago. And you combine that kind of technology with relatively well-educated workforce, people that wanted to work, and productivity began to rise, incomes began to rise, and that's what's driving that consumption of grain. Now, when they slow down, we're going to slow down. Will it pick back up? Sure. How soon or how long? It could be, I think, it could extend beyond just another corn season before we actually see that turnaround again. Those 10 countries, by the way, that's half of the global population in those 10 countries. Half of the world lives in those 10 nations. So what happens there matters a lot. These are projections for economic growth from the International Monetary Fund. That shaded area are projections for 23, 24. And I think the question really short term is how far down do we dip in 23? You can see for the advanced economies of the world, the blue line, Europe, US, Japan, Australia, we're likely to dip a good bit lower in 23 than the growth we saw in 2022. Globally, yeah, we're probably going to come down a step from where we were in 22 next year. Those emerging and developing economies, they may level off to some degree. And to the degree that they do will be very, very important in terms of the consumption of basic agricultural commodities. It'll matter, matters a lot. The average GDP growth in those nations since 1999 is 5%. Average growth. The estimate of growth for 2023 from the IMF, from that group of nations, is 4. So there may yet be positive growth, but yet at a slower rate than we had the year, much slower than the year before, and slower than average. So I think that has implications for what's going to happen on the demand side of that supply and demand table and that price determining equation. I put this chart in just to trying to put a picture of getting this inflation pressure under control. The red line, that's the consumer price index, CPI. That's kind of the most quoted inflation measure in the U.S. The green dots, that's the Fed uses a measure called the consumption index, and it takes out the one I track here, takes out food and energy. So it's more kind of what they call core inflation. And then the black line, of course, that's the increase in interest rates as they raise the federal funds rate, which then impacts borrowing costs all the way up in the line from houses to cars to farm loans to credit cards, everything else based on that. Well, as we began to realize in 2021 that these inflation pressures were not transitory, as we thought or might have hoped, the Fed then began raising interest rates starting about a year ago at this point. And now we've gone from virtually 0. Now we're just below 5% on that federal funds rate. Is it working? Yeah, it looks like it's starting to have some effect. Since the peak in June, we're seeing the CPI started to come down over the last couple of months. That other consumption index that includes food and energy, kind of core inflation, it's starting to come down. What's the target? What's the Fed? Where are they going to try to get the economy to? 2%. We're just getting started in this battle. And whether the Fed keeps raising rates to the degree they have, probably not. But will we see a relaxation of those rates, something that might kind of stimulate the economy? Probably not. That's probably a good ways down the road. If we're somewhere between 4 and 5 on core inflation and between 6 and 7 on the CPI, again, that's just starting us on the path to get us down to 2%. And I think this kind of quote kind of puts it, the challenge that the Fed faces in this environment, that the economists see there's risk to raising rates too much or raising them too little. Overdoing it pushes the global economy into a sharper downturn than needed to weaken price pressures. And then again, this is a global issue. While stopping too soon, we allow high inflation to become entrenched and require even more rate increases. So that's the balancing act that the Fed faces every time that Federal Open Market Committee meets, of how much to crank them up to get prices down where we need to be. Are we making some progress? Yeah, it looks like. Where we need to be? We got a long way to go. And so that's why I think the economic outlook for 2023 is one that we still have some real serious challenges ahead of us. Another factor that drove those grain prices higher, much higher, was China's feed grain imports. What have they done since they stepped into the market in 2020 and tripled the amount of feed grain that they were buying? Well, they're still buying a lot of feed grain, but look how that's backed off over the last couple of years. We're down now, instead of at 60 million metric tons, well, 40 is still a big number. Concerning for Texas is look at the sorghum portion of that. When we see China and we see our exporting a lot of grain, when we export a lot of grain sorghum to China, those are the opportunities when we see that price relationship between sorghum and corn become much more favorable. In that, when we see those big sorghum exports, in many markets, we'll see sorghum trade at a considerable premium to corn. And that's particularly true for many of our Texas markets. If you look at that current update for 2022, that sorghum portion of that, we're back down well below average of those last 10 years. So we're not seeing, again, that strong export movement when it comes to grain sorghum in the current marketing year compared with the last couple of years. And that creates some difficulty for sorghum markets and sorghum producers relative to corn. Go to that demand side we were talking about. This is what USDA did in the January update of their supply and demand estimates. feed use down, food use down, total use, domestic use down, exports down. Starting to cut those numbers as we're going through the marketing year. How about globally? Those are estimates of world corn total use in millions of bushels, going back to 2021 and then May of the current marketing year. We were steady for May, June, July, pretty good. August kind of held. September down, October down, November down, December down. Starting to see the impact of high prices and economic conditions that are less conducive to growth on the demand side of the equation. How long could that last? I think certainly well into 2023, based on just general economic conditions. So there's the bottom half of that chart I showed you earlier. We talked about increase of supply there of a billion bushels of corn. Well, what about use? Well, in this estimate or in these projections, USDA did raise corn use for next marketing year by 600 million bushels. So they raised use by about half of what they increased supply. And when we do that, that starts to raise that ending stocks number. And you raise the ending stocks relative to use, your stocks to use ratio starts to go up. And look at days on hand. A 30-day supply last year, current marketing year, to as we go into 22-23, based on these numbers, that days of use on hand, 42.4. Remember, 40 was that critical line. Here's what that line looks like. There's the 40-day line. When do we see record high corn prices? Get on the left side of that line. When you see $3.50, $4 corn, you get on the right side of it. Pretty clear. For the last 5 years, I don't think I've been to a single market outlook meeting when farmers didn't ask me, when are we going to see $5 corn? And the answer is really simple. Give me days of use on hand below 40, and you'll get $5 corn. I think the same can be said today. When are you going to see $5 corn again? Or $4.50? Get that days of use above 40. Now, that may be a little different in today's world because of higher cost. And so it might be with our higher input cost environment, we may shift that line up a little bit. But again, if you look at kind of where those lines would cross, and I'm just going to draw those right off that 22 and 21 prices. If we were to say a 42-day supply, even if we're elevated to a small degree, even a new price plateau in this current environment because of higher costs, we're still looking at corn $5, $5.20 bushel. That's cash. I think that's the kind of outlook we could be facing for 2023. A downward pressure on prices because of those kind of factors. Now, certainly lots of things could blow that up and change that very, very quickly. But I think if we have good weather, continuing economic challenging conditions, I think we're looking at a time we can see a shift back to that above 40 days. Is that a big step from 22 at 30 days all the way above 40? Yeah, it's pretty big. I don't know if you could make out 13, the 2013 crop year on that, and 2014. And I don't know how to move that cursor. I'm gonna step over and do it. There's 2013 right there. There's 2014. Yeah. You see 14, 15 there together. Could we go that far in 1 year? Yeah. Done it before, about 10 years ago. It's a big step, but certainly it's one that could be taken. So how are farmers coping with these prices and these opportunities? I find this website fascinating, and I'm sure our agronomists have something similar. If you're challenged with, okay, given the price of nitrogen today and the price of corn, what is the economically appropriate amount of nitrogen to put out on a corn crop? Well, this is I'm using the Iowa nitrogen corn rate calculator because that's where it really matters for price determining factors. Again, like those I states, what are they going to do? Given the price of nitrogen today and where corn is trading, I'm using a $5.50 corn and $1,300 anhydrous, which puts my nitrogen price at 79 cents a pound. Given those factors, what would be the optimal amount of nitrogen for a farmer in southeast Iowa to put on his corn crop this year? And I choose southeast Iowa because that's the geographical center of U.S. corn production. So what should those folks do? Given these parameters, the optimal amount of nitrogen per acre in southeastern Iowa is 133 pounds of N per acre. You can see that optimal yields if you put out 160, 170 pounds, that's where you top out your yield. But to maximize your return from fertilizer this year, this calculator would indicate about 133 pounds of N. That's got to hurt corn yields, right? If they're going from 160, 170 pounds of N back to 133, won't that mean less corn production? Given these estimates, the percent of maximum yield, putting out 133 pounds of N is 98%. Backing off 20 pounds of N, you're still going to hit 98% of your maximum yield. And there's other factors in the soil and the weather and environmentally. I think that we could certainly make up a couple of percent in addition to just the nitrogen's applied. So I think we're in an era of adapting to these high fertilizer prices and utilizing tools that'll help us do that. So a little more economic theory. Where do prices go from here? You learned this in Econ 101 too. When you read what this guy wrote. Lord Alfred Marshall in 1890, he told us where prices were going. They're going to go to the cost of production. Or maybe the cost of production is going to go to prices. Either way, it's going to squeeze the margin. That's what free market economics is all about. So if that is the case, if prices are going to fall to the cost of production or prices or input costs are going to go up to the price, what do you do about that? There's two basic management challenges if that is true. Number one is you better get your cost under control. You better be as efficient as possible with every penny that you spend on that crop. Does that mean spending less money? Maybe not. But it does mean squeezing every bit of efficiency you can out of your costs, out of those costs that you incur. And the other side of that is you need to lock in a profitable price when you see it. First piece of that is, do you know what a profitable price is? I was a meeting in August, probably 4 years ago. Farmer came up to me and prices were down about $3.50 a bushel on corn. And he came up to me after the meeting and says, I'll tell you one thing, I can't grow corn at $3.50 a bushel. I said, that's good information. You need to know that. You need to know you cannot grow corn at $3.50 a bushel. 3 weeks ago, corn was $4.50 a bushel. Did we do anything about that? If you know what price doesn't work, then that conversely, that gives us a price information that kind of does work. So we need to monitor and take advantage of those opportunities. So just to wrap up, I think this is where we're headed for 2023. Obviously tight margins, high prices, high cost. I think we're looking at an increase in corn acres. I think yields are likely to be up. If we're just like on average, normal yields will be considerably higher than they were in 2022. That's going to raise that stocks to use ratio or days of use on hand, putting downward pressure on prices. And much of that demand side is going to depend on what happens with the global economy and the global trade and movement of grain. And obviously the recession impact, any other disruptions, disputes, uncertainty around Russia and Ukraine is still a big deal. And then of course, weather is the primary determining factor. That's what I want to share. Chad, have we turn back over to you? Any questions that you might see online or anything here? Be glad to continue this conversation. Appreciate you having me.
Yes, sir. Thank you. Any questions from the in-house audience? Ashley, do we have any online back there yet? Like y'all did a perfect job answering their questions in the presentation then.
Muddled it up. One thing I might add is I do try to update a lot of this stuff. In fact, we have new supply and demand estimates come out tomorrow at 11 a.m. So we'll be updating all these charts. I do put out a newsletter on feed grains and for wheat every week. And so if you're interested in this kind of stuff and kind of keeping up with how these things might be changing week to week, just shoot me an email and I'd be glad to add you to that distribution list. Doesn't cost you a penny, worth every dime. So just give me a holler. Glad to do that.
All right. Well, having heard no questions or read any questions, I think that's it. Mark and Mark show, that was pretty good.
Do it again.
Yeah, do it again. I appreciate y'all taking the time and thank the Beef Sports Committee again and Producers Cooperative for helping us put this together. I think it's very valuable information. Our goal here at the Extension Office, the Beef Sports Committee, and absolutely producers is for the consumer to be informed And that way, they have all the information they can to make the best management decision for their operation. So I hope we accomplished that or a little bit tonight. Again, we will have this recorded. I will make it available as soon as I can. You can watch our Facebook page. It's the Brazos County Ag and Natural Resources Facebook page, and then also available on email. So with that, I appreciate y'all coming. Y'all have a good evening.